evening, you're tuned into Business Day right here on ET Now. I'm Ava on the Bash. A quick look as to how the markets shut shop this Friday before we take you through the top headlines. Well, it was certainly a day of consolidation. After the stupendous rally that we've seen, it was a bit of profit booking, although we did manage to pick up steam toward the fag end of the session and then close to the highest point of the day. Absolutely even Steven when it came to the market breadth, 1.2 lakh crores in terms of the total turnover, with the broader markets outperforming. So 6,016 is where we shut shop for the Nifty, with the Sensex also closing at 19,784. That's higher by just about 20 points. We keep you up to speed with all of the top stories after the headlines. The government takes complete control of IFCI. Most board members resign from the board to pave way for a new team. Anurag Joshi, Joint Secretary in the Finance Ministry, has been nominated to the new IFCI board. Videocon in talks to sell its Mozambique oil field in a deal worth around $3 billion. Sources tell ET Now that HPCL and BP are in the running. Suzlon finally gets the lender's nod for its debt restructuring plan. The wind energy major gets an extension of 10 years for its 13,000 crore rupee loan at a lower interest rates after promoters agree to bring in 2,500 crore rupees by March 2016. Automakers want the government to end the suspense over higher duty on diesel sports utility vehicles. M&M President Pawan Goenka tells ET Now that policy clarity on this controversial move will help automakers plan their strategies better. Straight to the action that we witnessed on the last street, and after seeing a good rally, it was a bit of consolidation, but no complaints, given that we did end close to the high point of the day. But really kudos to the broader markets, which have not only seen a good rally for the week gone by, but for today as well. It was higher by 2 and 0.3% respectively for the mid and the small cap indices. On the downside, it was metals which lost sheen today, so you had some of the major names which cracked in today's session. Rate sensitives particularly, so auto also featured on the list of losers. In terms of sectoral movers, on the upside, it was the oil and gas basket which held out very smartly, and the PSU index put on a good 1%. Some of the big losers obviously filtered in from the metals arena, so you had the likes of Tata Steel, JSPL, Hindalco as well lost out, as did Sesa Goa. Some stocks then which were in focus in today's session, you had a Manappuram Finance. There was an exclusive bit of information on a block deal which did come about on the exchanges. On the counter, 1.76 crore shares traded at a price of 43 rupees per share on the BSE. That's a total of 2.1% of the total equity trading in blocks. So the value of the deal was close to 75.6 crore rupees. The counter reacted very positively to that. It was the infra pack which was down and out. L&T particularly, CLSA had an underperformed rating which they maintained on the counter with a target of 1665, saying that they expect fewer highway orders in the coming quarters and execution is likely to remain sluggish. Angie Vessia was in focus. It hit a new high, in fact, today of a level of 560. He shut shop close to that level as it raised the FI investment limit to 30%. From the fertilizer pack, you had GSFC, and the dying moments of trade spurted smartly on the back of a block deal. 52 lakh shares traded at a price of 68.5 on both the exchanges. Shipping stocks were in focus today, so you had the likes of a shipping corporation, a Bharti Shipyard, and ABG Ship. There has been quite a bit of news floating around that one on an order win, so most of these counters ended higher in the session. Apart from that, you had a Tech Pro system that won a 147 crore rupee order from the Damodar Valley Corp, reacted fairly positively to that news. Financial technologies rallied very smartly today as the MCX equity will be starting trading by Jan end according to sources. So 1170 is where that one shut shop. Apart from that, Hindustan Door Oliver was in focus as it bagged an order worth close to 277 crore rupees from GSFC. Zodiac Clothing showed you quite a bit of traction for the second day on the trot as the Enam promoters bought over a 12% stake in the company. On the upside, you had the likes of a Cairn India, which did very well for itself. Most of the oil marketing stocks, particularly BPCL, shot up. There is a buzz perhaps of a diesel price hike. BHEL and GAIL too featured on that list. Well, what about the week gone by? It has been a fairly exciting one, so a good start to 2013. You had the Sensex, which put on close to 1.8%. Apart from that, for the week gone by, the Nifty also has rallied a good 1.8%. The broader markets, though, really, that's where you saw the star outperformance. The mid-cap index up by 3%, and the small-cap index that saw the quite a bit of traction, 3.7% higher. In terms of sectoral indices, real estate clearly stole the show. It was up by 5% for the week. Consumer durables also witnessed such good traction. You had the metals index, which has rallied smartly. Today, though, some profit booking, but that didn't deter the index from getting a good 2.3%. And IT too was higher by close to 1.8%. Here's where you saw a little bit of underperformance. It was the FMCG index, which was down by close to 0.8%. The Bank Nifty, though, for the week gone by has put on 2.86%. Some of the gainers then also on the Nifty that really did well in today's session. For the week gone by, in fact, you had individual stocks like a PNB, which rallied a good 8%. ONGC did well for itself, 6% higher. BHEL, IDFC and BPCL too were some of the good outperformers. But on that note, let's get in some important market voices and hear out what the market men make of the markets at this juncture and what the road ahead is.
I think there are some bumps along the way that I see in the first quarter, which makes it a little tricky to say whether we'll get it all in the first quarter, whether we get it in the second half. I'm not expecting RBI to go completely, gangbusters on interest rate policy turning benign, but I do think that we could get 100 basis point or maybe a little bit more depending on how inflation, shakes out, how monsoons shake out. So there's a few unknowns in the latter half of the year. I would say we are moderately overweight on India and have been for the last 2 or 3 months.
It looks that at least in 2013, we are headed for a new high. And when will it happen? Will it happen before budget? Will it happen in middle of the year or later part of the year? It is very tough to pinpoint, time, but it's going to be a wonderful market. It is going to be a very healthy market like what it was in 2012. We think earnings are going to be holding up at about 10-12% growth.
Okay, that is some market perspective coming in, but the stock that was clearly in focus and which shot up massively in the session today was IFCI after the government has taken complete control of the company. Exclusive information indicated that all of the directors, including the CEO, Atul Rai, resigned from the board to pave way for a new team. Let's get in the man himself who broke the story, Yatin Mota, who joins in from our research team with the exclusive details. Yatin.
Well, clearly it was ET Now which reported the IFCI board reconstruction earlier this morning. Now what we understand from our government sources is that after the government of India converted their debentures into equity, which led the government getting a 55.6% stake in IFCI, they wanted to anyways reconstruct the board of IFCI, which essentially meant that the old board members of IFCI would have to step down, and possibly then government would nominate their board members as well as would reconstitute the independent directors on the board of IFCI. It does not necessarily mean that all of the existing board members will not be reconstituted in the new board, but as a process of the takeover norm, the old members of the IFCI board would have to step down, and then freshly the government of India will initiate the reconstruction of the board, which includes appointing the existing members on the board of IFCI into the new board. Now we had the company also which informed the stock exchanges that the 3 directors have resigned from the board. In addition to this, the government of India has appointed Mr. Anurag Jain, who is the joint secretary in the Ministry of Finance, will be a fresh and a new director in IFCI. Of course, we'll have the CEO and the managing director and the various audit committee reports and other committees which will be reconstituted going forward. But this is a positive for IFCI in the sense that most of the market men are anticipating that the government will increase the incentives to IFCI. There is also a possibility of a banking license that could be in the anvil, and there could be another possibility which is disinvestment or getting a strategic partner for IFCI in the future as decided by the government of India ahead of budget. So let's see how the stock really pans out going forward. Today it ended up 10% higher, and the market men are anticipating that it should rally another 10 to 15% in the next few trading sessions as well.
Thanks very much, Yatin, for bringing us those details. Of course, you had the news which was then clarified on the stock exchanges, and the stock hit its highest level since the 24th of July, seeing its highest percentage gain since the 18th of September. From the oil and gas space, you had Cairn India, which was also in focus. It spiked close to 3% after the oil ministry approved its production plans. Virappa Moily has now paved the way for Cairn India to nearly double its output from the Barmer block in Rajasthan, a decision that has been long awaited. Let's get in Nitya Balakrishnan, who joins in from New Delhi with the latest details. Nitya, what exactly is Cairn India's plans going ahead?
Well, this does seem to be the Oil Ministry's New Year gift to Cairn India. It has approved extension of exploration in the mining lease area. It's also given the nod for Cairn India to increase its output from the Rajasthan block from 1,75,000 barrels per day, which is its current production, to up to 3 lakh barrels per day. This is a move that Cairn India has been seeking for over months now, something that Anil Agarwal has also written to the Oil Minister regarding. Now, we did speak to Cairn India after the Oil Minister did indicate that this approval is in place, and the company indicates that it will begin its exploratory drilling program towards the end of 2013 in 2014. Post the findings of this, it will present it to the management committee meeting henceforth. It will indicate what kind of target it can reach in terms of output from Rajasthan, and has also indicated that the company will be setting aside an investment of close to $1.2 billion when it comes to scaling up production from Rajasthan. So all in all, definitely a big booster coming Cairn India's way right in the beginning of 2013.
Thanks very much, Nitya, for giving us those details. The stock also taking heart from that information. But it was the oil marketing sector too which was in focus, and in a big move that is going to bring relief to some of the fuel retailers, the likes of an IOC, BPCL and HPCL, which were on fire in trade today. But it will also mean steeper fuel bills for consumers. The Oil Ministry has moved the cabinet note on hiking prices of diesel as well as kerosene. Virappa Moily today said that there is still a proposal in state.
Of deregulation of the diesel, and also that is the proposal. It is still in the proposal stage. The ministry is only processing that report, and we are ready to take a decision. There is a report given by Vijay Kelkar, who has gone into these things, deregulation, also the increase of the price. That is only at the proposal stage, and our ministry is yet to process and finalize his views and take it to the cabinet.
Straight to the auto space, and automakers want the government to end the suspense over the higher duty on diesel sports utility vehicles. M&M President Pawan Goenka spoke exclusively to ET Na's Kartika Trehan and said that the policy clarity on this controversial move will help automakers plan their strategies and better more on the other side.
We have always said that the artificial subsidy that we have of diesel prices cannot sustain. And we have both as SIAM and also as Mahindra & Mahindra, we have always said that the diesel prices should be brought not to the same level as petrol, but reduce the gap to the level that it was, say, 3 years ago. 5 rupees was increased a few months ago. Another 5 rupee increase, in my view, is still doable. If it goes beyond that and reduce the gap, then it will start pinching. So I think a 1 rupee increase every month for the next 8 to 10 months, I think it's okay. That's sustainable, but if it goes beyond that, it will start hurting.
Your exposure is largely in diesel segment. So do you think that could be an impact, or you look at holding production in any way?
As far as Mahindra is concerned, we are primarily diesel player. We have somewhat advantaged by the fact that the diesel prices were very low compared to petrol. But the UV segment is doing very well, not just because of diesel prices. In fact, if you look at December, once again, in spite of the price differential becoming lower, the UVs had very good growth in the month of December. So I think that growth will continue.
Budget is around the corner, and there's a lot of lobbying on the diesel taxation issue, which has been haunting the industry for almost 1 year now. Do you think that could possibly come into play this year? And if it does, what is the alternate plan that Mahindra has?
Well, I hope this talk about diesel vehicle tax gets killed once and for all. We have been hearing this for last 3 to 4 years, and it's sort of a sword hanging on our head all the time. I have said this in the past, and I'll repeat again, that any kind of diesel vehicle tax will be very unfortunate, because there is no reason why diesel vehicles should be discouraged. They are identified globally to be vehicles that are better for CO2, better for global warming, better for energy security and an import bill, and there is no reason why we should discourage diesel vehicles. The artificial diesel pricing, we have always said the gap should reduce. It is happening. So if there is a 5 rupee increase that's already happened, and if another 1 rupee per month happens for the next several months, where is the logic for putting in diesel vehicle tax? I just don't see the logic. So I would hope that once and for all a statement is made that don't worry, there will be no diesel vehicle tax, so that we can start making investments the way we should make investment and make our plans.
Moving on then, Suzlon was in focus as it has a massive exposure of close to 13,000 crore rupees to banks, and now it's finally got the terms and conditions of its CDR or corporate debt restructuring package approved by the consortium of lenders. Let's take it straight to Anirudh Ghosh, who's going to walk us through all of these important details of the CDR package. Anirudh, major relief for Suzlon.
Certainly, Avan, a huge relief coming in for the company, given the fact that it has such a huge exposure to the banking sector, and also given the fact that this decision, in fact, was taken on the 31st of December. So clearly, it's not going to be an NPA on the books of the banks concerned either. So clearly, relief coming in for the banks as well. Now, if you look at the terms and conditions of the CDR, two very big things. One, of course, the fact that they've been given a relief as far as the interest rate is concerned. It's been brought down to 11%. Also, the banks are going to be giving them an additional working capital loan of about 1,500 crore rupees. So that's going to help them bring their, bring their operations back up to speed. But then the other thing, of course, is that the company itself has actually volunteered to sell 3 of its subsidiaries. One of them, of course, is SE Forge, which is one of the Indian subsidiaries. The other one is a wholly owned subsidiary which is based in China. That's called Suzlon Energy Tianjin Limited. So basically, these 3 subsidiaries are going to be sold by Suzlon to raise money. It's going to raise close to 500 crore rupees for the company. So clearly, another key development coming in for them. And of course, the third positive which came out of the meeting is the fact that RE Power, which is of course the cash cow for Suzlon, is not going to be touched in any way. They're not going to be looking at any kind of a sale in terms of RE Power or any of its other overseas subsidiaries. So clearly, good relief coming in for Suzlon, relief in terms of the amount that they owe the banks, and also in terms of RE Power not being touched in terms of this whole CDR exercise.
Thanks very much, Anirudh, for bringing us all of those exclusive details. The stock price of Suzlon ended higher by just about 0.3%. Moving on then, and what could be a huge breather for Videocon Industries and also one of the largest deals in the energy space, Videocon has been in talks with several global energy companies to sell its entire 10% stake in the Mozambique oil field. Now, that transaction, valued at about $3 billion, is likely to close soon. Well, so who's in the fray and how will it help Videocon exactly? Let's get in Gauri Dwivedi, who now joins in with the exclusive details. Gauri, what exactly is in it for Videocon?
As far as Videocon is concerned, this is a deal that is important simply because of the kind of debt that is sitting on the company's books. You're talking about upwards of $3.6 billion. That's the debt on the company's books. A lot of it, of course, is also on account of its telecom fray, not gone as planned. But beyond that also, this is a deal that has been in the works for a while now. Shell, BPCL and Shell, BP and HPCL were the 3 companies with which Videocon had held discussions. Sources tell us that talks with Shell have advanced. And in fact, talks are now and negotiations are really in their final lap as far as talks with Shell are concerned. Valuation, of course, is anywhere between $3 to $3.5 billion. That's a huge valuation. In fact, sources tell us that was one of the reasons why talks with HPCL failed because of these steep valuations. This is a deal that will, of course, be one of the biggest as far as the energy space is concerned. UBS is the advisor to the deal. Sources tell us that the closure could happen in the next 2 to 3 months. Of course, it will be a huge breather as far as Videocon is concerned, not to mention that the company would also have some amount of cash to diversify in the Mozambique region itself. Remember, it actually it paid just a little over $100 million, and look at the kind of premium it's actually commanding in just over 4 to 5 years. So the company will, of course, like to keep some amount of money for exploration and drilling in that region, and beyond that, of course, for reducing and trimming its debt. A big deal in the energy space in its final lap. Shell, of course, is the front runner.
Thanks very much, Gauri, for pointing out all the contours of that exclusive deal and what exactly it means from one exclusive story to another. And the many recent corporate frauds have now pushed the Ministry of Corporate Affairs to proactively try and prevent a fraud from happening. The reason why the ministry has now decided to set up an intelligence unit. What will be the exact function of this unit and how is it going to help prevent corporate frauds? Let's get in Devdatta Das. She now joins in with the exclusive details. Devdatta.
Well, the work of this particular intelligence unit is going to be to prevent as well as probe into any corporate frauds that will happen in the future. Now, it will be a parallel body to the SFIO, which already exists and already probes into corporate fraud and is a wing under the Ministry of Corporate Affairs. But this particular intelligence unit that will constitute of bureaucrats, of income tax professionals, as well as police officers will be under the minister himself, Sachin Pilot, reporting to him directly. They will be keeping a tab on the reporting figures of all companies, their shareholding facts of all these companies from the MCA 21 website, which has now been made the one-stop shop for all company figure reporting, shareholder reporting, all details reportage for all companies, and any anomalies that will come up will be probed by these intelligence this intelligence unit. It is expected that it will become functional within the next 6 months, at least that is what the Corporate Affairs Ministry is expecting to do, and it will also coordinate in case it finds out anything with other government agencies like CBI and the ED.
Thanks very much, Devdata, for bringing us those exclusive details on that new intelligence unit which is going to be set up. Moving on then to the real estate space, in 2012 was a fairly forgettable year for the real estate sector. But while the hopes are high that 2013 will be good, the first signs of recovery, the return of investors in the property market, is nowhere on the horizon. Largest funds say that realty investments are still unattractive. So does this mean that a revival in the real estate industry will take longer than expected? Ritu Singh finds out.
These apartments have been lying vacant for quite some time now, and builders were hoping that house hunters, who have been sitting on the fence for long, will finally enter the market in the new year. But going by early signals, the much-awaited pickup is unlikely anytime soon, given the fact that even investors are shying away from realty deals.
Investors who were buying a lot of apartments have all gone out of the market across the country, because I see their difficulty for resale, because they compete with the developer himself.
At a time when cash is expensive, investors do not find real estate investments lucrative. Experts say unless the investors return, it will not get the home buyers to sign on the dotted line.
There is still uncertainty in the market. I think till the time that uncertainty doesn't go away, we will not see that increased activity as far as the investors are concerned. Now, when is that going to happen? Very difficult to say.
In fact, the pressure is already building on developers, and some have started striking bulk deals at huge discounts to reduce their inventory. HTIL, for one, has roped in an Anand Rathi fund to offload a considerable amount of flats in its Thane project. And only time will tell whether this trend catches up with other developers as well.
What could come as a silver lining is a rally in the stock market. A continuing uptrend could mean the investors can channelize their funds from equity into the real estate market and take advantage of tax exemptions. Couple this with the expected rate cuts and there could finally be something good waiting to happen for the real estate sector. Ritu Singh, ET Now, Mumbai.
Okay, so a fairly dull start to 2013 for the real estate space. But with that, we're completely timed out right here on Business Day. Thanks so much for watching. Keep it with ET Now.